Howdy campers, it's Friday on Simon's Trading Channel. Hope you're all very well and your weekend looks like it's going to shape up to be a marvellous, memorable one. I tell you what, these Olympics are pretty addictive. I'm very much enjoying them, and it's amazing to see when people can dedicate their lives to achieving such a high standard, how they manage to do it. And you just, even if they don't win, you just think that's something that everyone can learn from, is having that drive day in, day out to get yourself to a position of excellence and even have a chance of competing against the best in the world. And I think it's amazing. I think it's absolutely amazing. Anyway, enough of that. Let's do some amazing price action analysis. Now, I know what you're thinking. Simon, you don't normally have loads of indicators on your chart, and that's true. You'd be right in thinking that. But today I thought I'm going to mix it up, and I've thrown on a couple of classics. So we've got BBWP at the top, which is Bollinger Band with percentile. Basically, I have talked about this before very briefly, but I haven't used it in ages. And all that does, it turns the Bollinger Band width, so the John Bollinger invention from the 1980s, I think, into percentage terms. And that's all it does, and it plots it as a graph. So it effectively is a volatility indicator, but it's direction neutral. So when you see it going up, that doesn't mean prices are going up. That just means the Bollinger Bands are widening. And when it's coming down, that means the Bollinger Bands are contracting. So it's a volatility indicator. And on the bottom, we've got a good old RSI. But I've decided to change it. I'm going to look at it on the weekly time frame because CME is closing, which I'll switch over to in a moment. But just a couple of interesting points. And on that note, let's just dive in. Right, so CME will be closing its weekly candle in just over an hour. So what's that, 80 minutes? And yeah, it's looking pretty bearish this week. And that gap, it's begging. It's begging for it, that gap. But we'll see. We'll see what happens. Now, so the significance, and the reason why I'm putting on these, the RSI and the BBWP on a weekly time frame, is that basically you can see that the weekly volatility represented by the BBWP is really low. Like when you get those blue lines, that's it hitting whatever the setting's on, like super low, like less than 5%, super low. And then the top will be whatever it is, like 90 odd percent, so maximum volatility. And to spend this long down with this kind of blue color, so very low, like less than 10% or hovering around 10%, it doesn't happen all that often to spend as low down there. The last time period was here, right? Which was this 30 or whatever week-long consolidation. And you can see that when the volatility did start to pick up, as in BBWP started to increase in percentage terms, remember all that represents is widening of the Bollinger Band, but as a percentage. So in a numerical form rather than a visual one, the move was to the upside. So the Bollinger Bands expanded as the price moved to the upside. And so you would expect at some point the volatility to pick up, i.e. the Bollinger Band, the BBWP to start to pick up as well. But again, direction neutral. In fact, it's not a direction indicator, so direction has no meaning. But on the RSI here, I have, I don't know why, like RSI, when you, so for those of you who don't really know much about RSI, it's a momentum indicator, right? But you can, so strictly speaking, it's not directional, but you can use it in a way to give you a bit of both of those things. But all RSI is, again, this was developed in the late 70s. It's a fraction of the percentage profitable over percentage loss, okay, of whatever your selected look-back period is. and then it turns that into a percentage. So it's a fraction of gains over losses with a look-back period, which is set to a default number of 14. So for example, on a weekly chart like this, that would be looking back over 14 weeks. So it would take the average gains divided by the average losses and turn it into a percentage. And therefore, it's easy to extrapolate from that. If the percentage is above 50, then that means the average gains over the look-back period are greater than the average losses. Well, if the average gains are greater than the average losses, then that's price going up, and vice versa. So if it's below 50, then the average losses over the look-back period are greater than the average gains, and therefore our price is going down, right? So I think you see the point. Now, but for reasons that aren't entirely clear to me, and I don't know why this is the case, RSI has when you load it up on your trading view or whatever, it's the same for, I think, exchanges or whatever chart system you're looking at. It always comes up at 14 periods, right? Now, so for the look-back period is 14 periods. Well, I've often thought to myself, why is that? All right, and when they developed it, were they thinking, this has to be used over the specific look-back period that we say? But I completely disagree, and it just simply doesn't make sense. So if you're thinking about a look-back period as a time period, which is what it is, then why 14, and on a weekly time frame, why 14 weeks? Like, makes no sense at all. To me, maybe it makes sense to other people, but it doesn't make sense to me. I've just realized I've been talking about this for 7 minutes. I haven't even gone into the price action analysis, but just bear with me. So I've changed the look back period on this weekly RSI to 26, because that to me makes sense. That to me is, well, not to me, but in time it is 6 months, right? 26 weeks, half a year. Look back at that half of the year, take the average gains divided by the average losses and turn that into a percentage. That seems sort of more logical. So that's what I've done. And that's what you can see down here at the bottom. All I've done is I've changed the look back period from 14 to 26. That was a very long-winded explanation. And the reason I've done that is if you look to see where the RSI is relative to the 50%, which is the midpoint, this white line, it's got a moving average on. Don't worry about the yellow line for now, and I'll waste time taking it off. So it's so I'm referring really to the purple line, which is the actual RSI. When it's above 50, gains outweigh losses, therefore price going up, right? Combine that, so being above 50, with volatility expansion, i.e. the Bollinger Band's getting wider, which can only happen when price either starts to go up or down, then you get the trend, right? Or not the trend, you can then extrapolate as to what's going to happen next. So if you look here, so when this started to really expand, let's just pick an arbitrary point on the BBWP there, right? Like, you can decide what you want to conclude as expansion of BBWP yourself, but let's just say it's there. Well, if you just look down, you can see this is where the price was, and this is where the RSI was. So clearly, gains outweighed losses. So that would be a good time to go long or buy. And it probably wouldn't be a good place to short or sell. And I think you see my point. The counter, so the opposite, so this was BBWP expansion here. So just pick wherever you want. Let's pick here again. And you can see it's on this candle. And you'll see that the RSI is below the 50%. So losses outweigh gains. Well, that is price going down. So probably a good place to short, maybe not a great place to be buying, or indeed going long. So it's quite simple. I apologize for it taking nearly 10 minutes to explain. And the reason I did all that was, as you can see, the RSI is still on my 26 look back period, for the weekly is still above 50. And I'm not going to get bearish on a weekly time frame while the RSI is above 50 with the look back period of 26. So when this volatility does start to expand in a meaningful way, and it doesn't have to. Price could go sideways forever, but that's very unlikely. So when the likelihood of expansion occurs, the volatility, if RSI is above 50, which it is at the moment, then it's more likely that the move will be to the upside. And therefore the Freudian slip, the bull market will continue. However, if expansion of volatility on this weekly time frame occurs and the RSI is below 50, that's a whole different ball game. And I would not be at all bullish and rather more bearish. So there you are. It's taken me 11 minutes and I haven't even got out of CME's weekly time frame. Because your time is precious and, the Olympics is calling me back, I will just quickly look at the daily on Bybit. And you can see it's hovering around yesterday's low. But with only 4 hours to go before closure, that looks rather more bearish than this one, right? And so it's hard not to look at that as continuation to the downside. Ignore the RSI because it's not correct in this point. But also with this downside momentum and BBWP picking up, so volatility picking up, and if you can't quite mentally picture that, just put on Bollinger Band as well. God, I'm turning into a right indicator nerd, aren't I? So at the moment, visually, the Bollinger Bands is still contracting, but in percentage terms, there's a little bit of an uptick. But you can't see that. So if you look, so this Bollinger Band expansion clearly happened here, right? Because that started to move up, that started to move down, so they were expanding. What I would say is, using this Bollinger Band, if price basically closes anywhere below where it is, or 62,000, but yesterday's wick low, right on that blue line that I drew on yesterday, that to me will signify some Bollinger Band expansion, which will be volatility, and it's to the downside, to the dark side, Luke. However, if this is where roughly around here is where the closure happens this evening, and then tomorrow Bitcoin gets back above this is a 20 SMA, that's traditional Bollinger Band reference point. So the center line here is at 65.8. I mean, probably more useful is sort of 65.5. 65's been key. 65.66 has been key this whole time. Then I would be looking for more consolidation within basically quite a big range, which on daily closures goes from 68 and change to 62 and change. And that will mean the BBWP just continues sideways, and then you wait for the move to occur. But at the moment, if you wanted to sort of hedge your bet, so to speak, and this is not financial advice, then downside is more likely. Right, 14 minutes, goodness me, on a Friday night. I hope you've enjoyed the video. I enjoy making them, and I'm going to keep doing it. I think I've done like over 180 videos now. Anyway, so yeah, join me tomorrow, and do it all again. Take it easy, like and subscribe. Bye-bye.